Realtors, how does a 10% down jumbo loan sound to you? How about a 10% jumbo loan that can have an effective comparison APR in the 1s, 2s, and 3s? Too good to be true? It's not. Let me explain. The 30-year amortizing loan, which has been shoved down our throats as the end-all be-all, is an absolute horrible loan for the most borrowers. If they qualify for this product, they should definitely not be in a 30-year amortizing loan. 30-year amortizing loan, until you get to month 222, you are paying more interest than principal every payment. And if you ever look at the amortization schedule, for the first 5 or 6 years, you're paying 70, 80, 90% of your payment in the form of interest. It's all front-loaded for the banks. Again, we came up with this thing in the 1930s to help people buy houses after the Great Depression. It is old school, pre-boomer thinking. It's not even boomer thinking, it's pre-boomer. It's a horrendous loan if your clients can qualify for this. And to qualify for this loan, 700 FICO score, 10 to 15% reserves, only 10% down. The reserves can be stock, 401k, IRAs, gold certificates, very, very flexible. Qualifications are pretty easy as far as using restricted stock, using the method called depletion. So if a client has millions of dollars in the bank, we can convert that into a income, monthly income, and get them to qualify, or use a hybrid of any of these techniques. But let me walk you through this. We're going to go fast. We're going to compare a $1.5 million purchase at 1.35 finance, 10% down. Good luck finding a jumbo loan with 10% down, or even allowing a 90% CLTV. But we're going to compare this to a 7.5% rate a loan. We're going to say that this client deposits roughly $8,000 a week. This can be combined income, household income, rolling through their financial ecosystem, meaning rolling through their checking account, post-employment tax, post 401k contributions, post maybe health insurance contributions. If they're self-employed, all their money could go right into this, and it makes it even more powerful. This is an interest cost savings loan. This is a first position HELOC tied to a checking account that uses, this is the secret sauce, uses zero balance sweep technology, which I will go into in a different video, or you can go to gohomeselect.com. On the second page, there's a 20-minute tutorial there about how this actually works, how the nuts and bolts of how this works. But let's keep rolling. So your clients are buying a $1.5 million house. They're depositing $8,000 a week, thereabout. And the next thing we're going to do is we're going to figure out what they do with their funds. So we're going to assume that this family is pretty conservative, because most of the families that take this loan, or borrowers that take this loan, are conservative in nature, or want to be conservative in nature, and they want to have financial control over their biggest asset and their biggest liability, their home and their mortgage. This allows them to do both. They no longer have to live for the house, because in the normal world, if you're paying down your principal real quick in a 30-year amortizing loan, and then all of a sudden, God forbid, you get sick, and you call your lender and you're like, hey, I paid down $300,000 in principal, and they're like, ooh, that's great. Make your payment. Well, I lost my job. Yeah, well, make your payment. Go refinance. Oh, that's right, you don't qualify because you don't have a job. This is the last loan your clients will ever do. It is that powerful. Let's roll. So calculate results. The algorithm does the work. I'm giving you, if you go right to gohomeselect.com, you'll have access to this simulator. You can play with it yourself. But look at this. In this particular scenario, and again, not everyone's going to qualify. In this scenario, 7.2 years is what it's going to take for this client to pay off their house in full versus 30 years. They're going to have, at that time, they bought it 7 years ago for 1.5 in California markets, or New York, or New Jersey, or Florida, in hot markets. A 1.5 house 7 years ago is now worth what? 2.5, 3 million? Big bucks, right? They are also going to have, not only do they have that house free and clear, they're going to have a $1.35 million line of credit free and clear. They're only going to make 86 payments on the house versus 360. This is the kicker. They're paying only $486,000 back in the form of interest, on a 30-year amortizing loan, they get the opportunity to pay $2 million. So we are literally saving your clients nearly $1.6 million in interest expense. And they have access to all the money. All the money that they've used to pay down this mortgage is still available to them. It's just in a line of credit. So they're no longer being charged any interest on their home, and they're taking money that was probably sitting around in a checking or savings account earning them nothing, and they've leveraged it into basically that money now earns 7.5%. So they've turned it into a performing asset for them. Amazing. Here's the real kicker. If they want to make an interest-only payment, sure, they can do that, $5,700. Once they've started paying down principal and they have room on the line, do you know what happens if they don't make a payment? Nothing. Their balance just goes up by that month's worth of interest. Nothing derogatory reported, paid as agreed. Now, in this scenario, we're paying down at nearly $16,000 a month versus $3,700. We're paying down 14% per year, so we're really knocking it out. And we're only paying back 36% of the borrowed funds in the form of interest versus a conforming loan. You get the opportunity to pay back 152% of the loan amount. So here's the kicker. 2.164 comparison effective APR versus their 7.5. Do I have your attention? I should. If I don't know what you're focusing on, because this is a game changer. Do you know why most clients don't come back to you realtors and buy second homes and investment properties? It's because they can't come up with a down. But look what happens with this loan. In fact, I've got a client in Vegas right now. We put him in this loan in January. He's already in Vegas now, getting ready to use the equity that he's generated by paying down his principal. He's going to simply stroke a check against his house for the down payment. We'll use a DSCR loan. He doesn't even have to income qualify, and he's now going to buy his investment property out here. This is a wealth-creating machine for those who are capable of understanding it. Not everybody understands it. I have friends who have been in the game for 30 years. I've had to beat them over the head with this thing for weeks before it finally clicked. But look at this. In 2 years, this client has already built up $309,000 in equity on top of whatever the house has appreciated. But on their line, they now have $309,000 available versus a 30-year amortizing loan. They pay down a whopping $26,000. They could literally not make payments for a couple of years, and nothing derogatory would happen. They could take a year off and write the great American novel. Nothing would happen. It is that powerful. And if you really want to get crazy, let's look at wealth accumulation. So let's assume that the house is going up at 5%. Let's say the stock market's going up at 7.5%. It averages 10. We'll say 7.5. Now, this client signed on for a 30-year mortgage, right? So instead of that, with ours, they're paid off in 87 months. So let's say we go from 87 to 360, and they invest that $9,400 into the stock market instead. Look at what happens to the difference in their net worth. On this, they have a very nice net worth. They have the house free and clear in 30 years. It's worth $6.5 million. Or they can extricate themselves from this payment as quick as possible, and then take that payment, the money that they were going to be spending on the house, and put it towards wealth accumulation, and they've picked up another $6 to $7 million in wealth, directly because of the fact that you introduced them to me. Realtors, this is a game changer. I'm telling you, I've been in this game a long time. Certified residential appraiser at one point, mortgage banker, realtor, property manager, builder, developer, investor. I have never seen anything like this loan. It is a game changer. Reach out. Let's talk.